Hello, everybody. Welcome back. This week's class is reverse mortgages, a controversial topic, but I'm going to give you the down and dirty, quick and easy information on it so you can make decisions for yourself. Not as scary of a topic or product out there as most people make it out to be. I remember the New York Times writing an article and putting it on the front page that reverse mortgages were stealing homes from seniors. But if you read the article all the way to the end, it was because people were forgetting to pay their property taxes. So you can see how misinformation out there really does twist the truth, and we have to be careful about sensationalism and the rumor mill that occurs in the reverse mortgage world. So let's get started. For those of you that are new to our program, the Foundation for Personal Financial Education is a nonprofit organization designed to create these education out there without the bias and the sales that you see going on and all those wonderful dinner seminars and now these sales classes via Zoom and all this other stuff that goes on out there. So be careful how you're receiving information and how you utilize it. Hopefully you find a different atmosphere in everything that we put out there. And hopefully we can get back to our in-person classes as soon as possible. And then legal disclaimer, everything we talk about in our classes is for education purposes only. Please work with your CPAs, financial advisors, attorneys, mortgage loan officers, whatever it may be, to specifically address your situation and understand that you are in a different situation than anybody else out there. And so there is no cure-all for everybody. There's no one product out there that fixes everybody's situation. But certainly reverse mortgages cannot just get thrown to the wayside. So let's dive in. Who qualifies? Well, first part is that there has to be at least one person over 62 years old on title. And the only exception that they will make is if you're married, your spouse can be under 62, but one of you has to be over 62 to be able to do a reverse mortgage. Then occupy and or purchase a property as a primary residence, meaning it can't be a rental property. So yes, you can purchase real estate with a reverse mortgage as long as the intent is to utilize it as a primary residence. Think about it like this. It's not exactly 50%, but just think about this mortgage as a 50% loan. If your house is worth $300,000, the reverse mortgage will be somewhere around $150,000. So if you were purchasing the home, that means you would have to come up with $150,000 to purchase the home, and then the reverse mortgage would take care of the rest. The reverse mortgage is no different than any other mortgage out there, other than the fact that you do not have to make a payment. So just like you would go buy a $300,000 house with a big down payment of $150,000 and get a regular mortgage, well, this would take the place of the regular mortgage. So don't confuse this with any crazy weird program. This is literally a mortgage. It just doesn't come with payments, and you have to pay it back upon the sale of the house, either after you pass away or when you choose to sell it, which we'll talk about more as we go. And then no delinquent federal debt. This is a federal loan. This is an FHA loan. And so if you are behind on taxes or things like that, they don't want to give you money unless you prearrange the payments to be made and get caught back up. Okay. Participate in the counseling session. So they have to counsel you up and make sure you know what a reverse mortgage is and that it's appropriate for your situation. This is because of the quote unquote protected class that is allowed to do reverse mortgages. They want a third party to look in and make sure that there is nothing shady going on or nobody's forcing somebody to do a reverse mortgage or anything like that. Once you get the counseling done, the loan officer or mortgage company will verify income, assets, monthly living expenses, credit history. They'll look through all of that and make sure that you have timely payment of real estate taxes, hazard insurance, and if you have flood insurance. They have to verify all of that. They want to make sure that you do know you do have to pay your property taxes. Otherwise, you might lose your house. And then there's the house itself must meet lender's qualifications. This is an FHA loan. It's not any different than any other FHA loan. So it has to be a HUD approved condo complex or townhouse. It has to be a stick-built home. Theoretically, you can do them still on manufactured homes, but the rules are extremely stringent, and there's a lot of extra inspections that have to be done. So you have to be extremely careful. Costs. I hear a lot of people say, well, the costs are really expensive to do reverse mortgages. And well, in some respects they can be, but they're not much different than an FHA loan, a regular forward FHA loan. So you have all the typical regular mortgage costs, whether it's appraisals or inspections. You've got credit report and flood certification, title and escrow, loan officer origination fees. Those are all very normal in a regular mortgage. Okay. Then there's the counseling fee. Well, this is the type of loan that you do have to get counseling. You typically pay that out of pocket, and 100 to 150 bucks is what you'll pay for that. So nominal fee that you'll have to pay for a counseling session to get the counseling certificate. And then there's the mortgage insurance. Okay. And so this is where it could possibly be expensive. If you are purchasing a home, all of this has to be paid out of pocket. If you are refinancing, all of this has to be paid in the loan except the appraisal and the counseling fee. All right, so the mortgage insurance, they've got other options now. So consult with a loan officer and look at all your different options. But typically you'll see 2% of the value of the house is the mortgage insurance policy on this. Then the ongoing costs, this is where people for some reason get confused about a reverse mortgage. There is still interest. If you're not making a payment, that interest accrues, okay? So yes, there is interest in a reverse mortgage, and it will be added to the balance owed when you pass away and the house gets sold, or sooner if you choose to sell the house before then. And then some old reverse mortgages have monthly servicing fees. There's been rumors of these coming back, but for the most part, they don't exist anymore. So that one, I put if one as a qualifier on that. And then mortgage insurance, count on about 0.5%, not a full percent, 0.5%. So if your interest rate is 3.5 on the reverse mortgage, then you're really accruing at 4%. Okay. So they're adding 0.5% that accrues for mortgage insurance to make the program work. Obligations during the loan. Can't be a rental property. That's the big no-no in this reverse mortgage world. So this does have to be a residence that you utilize for yourself without renting out. Keep it in good condition, no different than any other mortgage out there. You cannot allow this to get dilapidated, and they do not have reverse mortgage police. They count on HOAs and city ordinances to take care of things like that. Even your homeowner's insurance will pay attention. They'll come out and inspect your roof. Whether you know it or not, a lot of these homeowners insurance companies are required to drive by your house at least once a year to make sure it's in good condition. So you can't let it get dilapidated and fall apart. And then maintain paying homeowners insurance, property taxes, and HOA. You have to pay these things separately. This is on you. This is your house. You still own this house. Even if you have a reverse mortgage, you still own your house. Okay. Now, how much money do you get? Well, this is a chart that shows an interest rate and then what we call a factor, a principal limit factor. And if you look at these numbers, this is 47%, that's 49%, that's 51%, that's 52%, all the way down to 58% of the equity. Okay, so that's what the factor is. It just tells us how much of the house's value you will be able to access via a reverse mortgage. And so when you look at this, you'll notice that as the older you get, the more equity you get access to. An 80-year-old gets access to 58% of the value of the house, whereas a 62-year-old only gets 47% of the value of the house. Okay, so there is a logic behind that. If you're 80 years old, you have less life to live than a 62-year-old, so they can issue you more equity with less life to live. It's kind of an actuary table. Then the other side that you look at here is go from 4% to 4.25 to, 4.125 to 4.25 to 4.375. The higher the interest rate, the less equity you get. So you move from 49% at 4% interest rate, and then jump only 0.375, and you're down to 46% of your equity. So the higher the interest rate, the less equity you're going to get access to. So then there's the flexible payment options. What can you do with this money? So this is where maybe this starts making a little bit of sense for people. Let's say you own your house free and clear, and you don't really need any money now, but you were thinking about $20,000 in home improvements. And your choice is pulling it out of an IRA and paying taxes on it and dealing with that and spending that money, or maybe getting the line of credit. This is the most common way this reverse mortgage is used right here. If you own your house free and clear, and they'll give you access to about half the equity in the home. If you have a $300,000 house, that's $150,000 you would have access to, and interest only accrues on what you've borrowed. And that's the important part for people to understand, is this is no different than any home equity line of credit, other than you don't have to make payments. The payment is not owed until you either choose to sell the house, or you've passed away and your heirs will have a year to sell the house. Okay, so the credit line just gives you some flexibility in the future, whether you want to do home improvements or buy a car or handle emergencies that may pop up along the way, or even pay for long-term care as you need it in the future. You can do that from the equity in the home and not have to worry about paying this back until the house sells. That's really important, because that is the big reason that people utilize this reverse mortgage. You can enhance your retirement. You can live in your house longer and afford your house longer if you're struggling for money by having a reverse mortgage. You can utilize this to pay off existing loans or purchase a home as well, and that would be the reason for lump sums. So if you owned a home that was worth $350,000 or $300,000 and you owed $150,000, you could do the reverse mortgage, pay off the existing loan, and have no mortgage payment for the rest of your retirement. That's usually the goal, is to be completely debt-free and in retirement. I mean, if there's a first choice for everybody, you have no debt heading into retirement. But if you end up in retirement and you owe money on your house, you can do a reverse mortgage and get rid of that payment. You still have the debt out there, but it doesn't ever have to be paid back until that house sells. And that's really, really great for financial planning purposes. This can really change the situation, because if your budget is stretched paying that mortgage payment, your choice is either to downsize or maybe do the reverse mortgage, and everything is perfectly fine and you can enjoy that house for the rest of your retirement. Then there's the income choices that are out there. We don't use these very often, and I'm not a big fan of these, because there's a very distinct reason that I'm not a fan of these. These are not technically income for life. They're income for as long as you own that house. And if you go into a long-term care facility and sell your house, the income stops. And so when we look at the reverse mortgage for income, a lot of people in their mind think that that's all it does. Well, it's absolutely the most rare reason that somebody will use a reverse mortgage. So the income for life is not necessarily for life. It's the life of you owning that house. So be careful about that. On the income side, the vast majority of people will take some money out at closing to either pay off an existing mortgage or do some home improvements or buy a car or whatever it is that they planned on doing with that money, and have the rest available to them on the line of credit. So that way, anytime you need money, you can go reach in there and pull it out. Repayment. this is the most important part of this loan. This is a government loan that is a non-recourse loan. The balance owed will never exceed the value of the home. Okay. So you have to pay this back anytime you want if you sell the home. If you sell the home, the proceeds from the sale of the home will pay off whatever you owe, not to exceed the value of that home. And then you certainly can repay or refinance if you win the lottery for whatever reason you want to pay it off. Now, the scary part, they force you to pay it back. Well, if you don't live there anymore, if you get caught as a rental property, for instance, if it's not your house anymore, if you don't live there anymore and you're renting it out or you've abandoned it, then they're going to ask you to sell the home and pay back the reverse mortgage. Now, I did know a lady that was in a rehab for more than 12 months, but they were open and honest with the lender, and the lender said, well, as long as the son's taking care of the house and somebody's watching it for you, and you give us letters saying that the doctors believe you're going to be back at home, then we'll let you stay, and there's no problem. And there never was. She was out of the house for, I think, over 18 months. But the doctors did get them back to the house. The doctors did write letters that she's improving, and they were hoping to get her back home. And then the obvious one, after the passing of the last homeowner. Okay, that's important. It's the last homeowner. If you are married and you are both on the reverse mortgage, it's when the last homeowner passes away. And the heirs will get 6 months with 2 3-month extensions, meaning the heirs have to show after 6 months that they've got it on the market and they're trying to sell it. And then they have 2 3-month extensions after that. So they have up to a year to get this place sold and get the reverse mortgage paid back. And then if you don't pay your property taxes, that's a no-no. We can obviously see why. But I actually watched a lender jump in and pay back property taxes before a homeowner lost their house, and went back to the homeowner and said, hey, please pay us back. So they jumped in and saved the house for the homeowner. So don't think it's all bad out there. These lenders don't want you to lose their house, okay? And then if you don't pay your homeowner's insurance or homeowners association, and I think we know that the homeowners association will climb through the little door stop or something to get payment. So it's kind of hard to not pay an HOA. They will bug you every single day. But the same thing on your homeowner's insurance. They will force homeowner's insurance on you if you don't pay your homeowner's insurance. So hopefully you can see a lot of different reasons to utilize a reverse mortgage. I have a lot of people that have this epiphany when they have no heirs, especially when you have no heirs and you look at the idea of dying with a paid up house, one of your bigger assets in your portfolio, and you didn't get to utilize any of that equity. And so if you have no heirs, a lot of people consider using these reverse mortgages to unlock some of the equity in their home, or upsize. I've seen that as well. You live in a $500,000 house, but you want to live across the street with a view, and it's $700,000, but you don't want to pay anymore. I've seen people use a reverse mortgage to upsize their retirement. I've seen people use a reverse mortgage to buy a helicopter, believe it or not. I've seen people also use their reverse mortgage to go gamble at the casino and then wonder where all their money went. So be responsible, be careful with your with how you utilize this. And I'm always a big fan of this being part of a greater plan. I don't like the financial world being product sales. And I think that financial planning is important, and we need to have a reason for the reverse mortgage and use it properly. So obviously, if you ever need help with anything, this whole world of COVID and all that, we're here to help. We're still working. I'm looking for things to do. I'm making new videos all the time, but give us a call, 800-345-3155, or contact us at sesweb.net. Certainly our website, we maintain with all the class information. Hopefully in October, we'll ramp up full class format via Zoom with all of our locations, whether it's Mesa, Scottsdale, Sun City West area, community college programs, Pace, not Pace, and Prescott. We have a lot of different locations that we've been doing these classes for 7, 8 years now. So hopefully we'll get them back up and running. And for now, enjoy these short little classes and come back next week. And certainly give us a call if we can help you out with anything. Thanks again. See you next week.